Mr. Chairman.
Thank you. Thank you. Dr. Hartwig, is there any evidence that over the past quarter century, insurance companies have had an increased failure rate because of climate change?
Thank you, Senator. In fact, there's no evidence that over the past quarter century that there has been any increase in the failure rate, the rate of insolvencies, the rate of impairment, as we typically refer to it, with respect to property casualty insurance or reinsurance companies as a result of climate change, or quite frankly, for any other manner. The data I cited earlier from AM Best, the premier rating organization of insurers in the United States, is quite clear on this, that in fact the insolvency rate, the impairment rate of insurers has actually fallen dramatically over the past quarter century. So what this shows is that insurers have done a good job of managing this risk. What insurers are doing is trying to make insurance available everywhere that they can, but they can only do so if they can earn a fair rate of return. Going back to the figures that Professor Keyes just showed, as he acknowledged in his testimony, that the numbers overall are very, very heavily influenced by Florida and California. Okay, and when we look at those two states have structural issues with respect to, I'll take Florida for example, absolutely rampant legal abuse in the system that drove up system costs and was in fact the principal factor associated with the impairment of a number of insurance companies in that state, okay, leading to an explosive growth in the state's market of last resort. Very fortunately, we've had a series of reforms in recent years, and in fact, Chart 2, Exhibit 2 in my testimony, what you see is that the non-renewal rate in Florida in fact, seems to have peaked at around 3%, even went down slightly in 2023. Those reforms took place in 2022 at the very end of 2022, so are really bearing fruit just this year. So I expect to see, in fact, the non-renewal rates in states like Florida fall. California has been a bit slower. They've been slow to come around to the realization of reform. They finally signed on to that. Some of those reforms will go into place in 2025. Some of them went into place this year. We would expect to see a turnaround there. And in both states, we are seeing insurers signal that they are coming back into the marketplace as a result of the reforms. They're not talking about climate. They're talking about the obstacles to writing coverage in these states is related to the legal environment associated with those states. Obviously, there's the explosive population growth, and then, of course, the pressures associated with inflation.
I think you've answered this question, but I'm going to ask it anyway, and I'll let you decide if you've answered it. Are fraud and litigation major drivers of the insurance prices, and what can state governments do to limit the effect of these factors have on insurance costs?
Right. So, yes, in my response to the last question, I think I discussed quite a few of these things. But when we think about, let me give you an example in Florida to be very concrete. And Florida's problem, which again is often ascribed to climate, and not to say that climate is not a driver of loss, but Florida's problems and California's problems are largely man-made disasters. Okay, in the state of Florida, for instance, an issue called assignment of benefits, which I didn't see reported at all in the report that we received yesterday, not discussed at all. This is a situation which, to my knowledge, is relatively unique in the country, where a policyholder can say to a roofing company, hey, guess what? I'm going to turn my policy effectively over to you. You deal with the insurance company. Well, what do you think is going to happen when you have a bunch of roofers that are now in charge of millions of people's insurance policies? They're going to knock on everyone's door and get every roof in the entire state to try to be replaced, even when it doesn't need to be replaced. This results in immense amounts of litigation. For which insurers had not priced into the policies. Their only thing that they could do at that point is essentially impose moratoria on writing new policies until the situation was solved from a regulatory perspective. And that's exactly what happened in 2022 when Governor DeSantis called 2 special sessions of the legislature.
Dr. Hartley, my last question. Democrats intentionally withheld their new staff report on the effect of climate change on insurance. As a result, my staff didn't have an opportunity to fully review their findings prior to the hearing. However, they did provide raw data concerning non-renewal. What stuck out to you in your review of this data?
Right, so I was in the same boat, of course, not receiving I received a spreadsheet with absolutely no detail as to actually what it was yesterday, but looking at it quickly. So as I mentioned, the U.S. non-renewal rate is greatly influenced by two states, California and Florida. If you back those out, and in fact, in Exhibit 2, in my analysis of my testimony, I show a column, rightmost column, is called median state. Median state, the variance in median state from 2018 non-renewal rate to 2023 goes from 0.79% to 0.86%. Very little variation. So across the country, when you look at the individual state experience, again, this is why I say 99% plus of policyholders across the country are able to renew their policies in virtually every year without a problem. I see that Florida's non-renewal rate has leveled off. And I would expect California within a year or two to see the same pattern. But again, the fact that large disaster-prone states like Texas and New York do not mirror the pattern we're seeing in states like California and Florida suggests that something else is at work. And that something else is not more climate change-related pressures in Florida than there are in Texas. Lord knows we've had a huge number of disasters in Texas. But Texas went through its cathartic moments in terms of problematic regulation of the insurance industry 15 or so years ago. They understand now that they need to create a market that attracts capital in a place that's always going to be risky, and so far, so good.
We have Senator Padilla.